First of all, welcome to my channel. So today we are going to mainly focus on our grade 10 syllabus. So your accounting syllabus, that means you will be having your book, that means your syllabus is business and accounting studies. So you will be both having business studies and you will be having both accounting. So your accounting part starts from unit 4. So if you're telling about an introduction about accounting children, accounting means it's like a chain. It is connected to each other because why? It is a process. That's why in the meaning itself, definition itself, we are telling that it is a process. It is not anything. It is not indicated like that. It is indicating as a process, like a chain. It is linked to each other, right? So now let's us go onto our lesson. So first of all, you have to understand what is accounting. Now you are learning. Okay, I have selected this as my master subject, or it may be a compulsory subject in your school. But first of all, what is this accounting? Let us go to the definition. So it is the process of providing economic information required by the interested parties of a business for decision making. Now, if you are telling what is this providing, it is a process. Process means it is something called as like yes, process means it is like a chain. We can take it like a chain. So it is the process of providing economic information. What is provided? That means you are giving economic information. Examples, you are giving like the values. So because of this, that means the interested parties. Now you study who are the interested parties. Or you can tell us interested parties are also known as what? It is also known as stakeholders, right? So it is also known as stakeholders. So who are the stakeholders? Yes, owners, then these managers. So because of this, as we are providing economic information, it is. So why who is asking this one? Okay, that means it is for the essential of the stakeholders. That's why we are providing economic information like owners and managers. Okay. So, okay, so you have learned about 10 stakeholders, right, in your syllabus? So like that, so there are many stakeholders. So because of their requirement only, we are providing economic information. Now, when you are telling for what we are, why we are providing economic information, because to take a decision. So what is you make decision? Example. Now, because of as we are providing economic information, that means we are providing we are in the accounting process, we are providing the profit. Because of the profit, so it is who needed this profit? Yes, the owners are need. That owners need the profit value, right? So because of this, they can take decision whether I have to invest more. So what are my liabilities? So here, there only you can understand who our that means then only we can take a decision whether I have to invest more or whether I have to invest less, like that. Or like who are my debtors, how can I settle it, like that. So to take decision making only, we need this accounting. So if you are telling what is accounting, if you are considering it, okay. So when you are considering it, so what can be accounting? So when you are telling what, it is a process. Okay, process. Okay, and you're in the process. You're providing information, and you're providing information, and for whom? For the interested parties. And if you are saying what you are What you are providing information. It's a process. You're providing information for whom? For interested parties. And why? To take decision. Okay. So that is what we are using it here. Okay. So see, so this can be something called as your it's like related to some short notes, right? So now you can even study here, right? Okay, now let's us go for the next one. Now let's go for the objective. Okay, now what is the main objective of here? So the main objective is to provide economic information to the interested parties for decision making. Not only that, we are also providing accounting or we are providing economical information for other some reasons also. See here, now we are first seeing whether the business has earned a profit throughout the year, whether the business has earned, right? So that is one. Another one to know the financial position. Financial position means what? Like what are our assets, what are our liabilities. Okay, so like that you can identify a financial position to fulfill legal requirements. So when, for example, some organization, especially these companies, for them, in order to take some legal requirements, example, when they want to obtain loans, they have to provide this financial statement. Okay, so because of that only we are maintaining accounting. That's why accounting is needed. And next one is to reduce fraud and errors. What happens if children, if we are not maintaining accounts, yes, then we don't know who our debtors. They can cheat us, right? Because we can't trust anyone. So who our debtors and who our creditors. So in order to identify that only, we are maintaining accounting. Understood? Next one, it is one of the important things. It is called as our accounting process. Okay. So when you are taking this accounting process, okay, you have to have a very good understanding. If you know this accounting process throughout your O-level journey, it will be very easy to identify. Now, your syllabus is being, that means it is including both business studies and accounting. But if you're extracting all the accounting chapters, you can see how it is linked. Okay, see through this you can see how your syllabus is being created. So first of all, in accounting process, in a process you always in a process you have to have input, and also that process will be going on and there will be an output, right? So now let's okay, first of all let's see that what our inputs. So we are inputting transactions and events. So we will be explaining that in further. Next one is process. Process means like what we are doing. We are recognizing, measuring, recording, classifying, summarizing, and interpreting. So this will be explained in detail in further chapters. So in this lesson, you just have an idea what are the processes. This is something called for extra knowledge. Okay, these are for extra knowledge. So like you don't need to know now. Okay, this is for extra knowledge. So this is not in your syllabus, but if you're having an idea on this process, it will be very easy to identify, or it is very easy to understand your concept, accounting concepts. Understood? Okay. And also this financial statement will be the output. Okay. So next one, let's go for another one. Okay. Now next one, let's go to one process. That is the process. There is something I wanted to explain you. Okay. Now examples, because of this output, not only because of these financial statements. Okay. Now what happening? That means we are providing economical information. We are providing economic information in the on the form of reports. We are providing. We will be providing. Okay, so we will be providing what? We will providing reports. Okay, so in that we will be providing reports, and also that reports are called as financial statements. Okay, so that means we are providing reports to whom? To our stakeholders. Okay, so we'll be providing our reports for whom? For our stakeholders in a format of financial statements. And also these financial statements are based on what? It is based on transactions. Transactions and events. Okay, so this is one of the inputs. So what we are doing, we are providing the reports for home stakeholders in a format of financial statement based on transactions and events. I hope you understood this concept. Okay. Okay. Next one, let's go. Now let's go equally. So what is this business transaction? So this business transaction means, okay, you are exchanging resources between businesses and other parties. Business means it is an individual. You have to consider business as an individual. So business and another party. Another parties, or you can another party, two or more. Like, okay, example, and also you should know that we are taking the monetary value. Example, like are we taking our employees' talent? No. In a business transaction, always it should have a value, monetary value. Okay, understood. So if you go to the transaction, that means you are exchanging resources. Resources means, examples, you can be your assets. So in future, we'll be learning what are these assets like that. And not only that, that means you are changing like your assets or like your money. So that means you will be exchanging between one party to another party. When not one party, then one party will be yourself. That means it will be the business and other parties. Okay, now let's see the examples here. Additional capital. In additional capital, what is happening? In additional capital, it will be the business, right? So it will be the business. So business and your additional capital. That means your additional capital means you are. That means the owner is. Okay, that means the owner is providing capital to the business. Okay. Okay. So there are two individuals. One is the owner and one is the business. Okay, next, so let's sales of goods. Sorry, sales of goods. The sales of goods. Sales of goods means you're selling your goods. Who are the two parties? One will be the business, and the next will be sales. You are selling your goods, and one will be the customer, right? So here you can clearly identify who are the other parties. One is the business, and how a business should be included in a transaction. And because it is related to your business, right? Okay, now let's go for the one is business, another one is the customer. Electricity payment. What is the electricity payment? Yes, you are paying, right? So one is who are the parties involved? Business and the electricity board. Let's say electricity board. Yes, the electricity board. Okay, so next, obtain a bank loan. So this is what the business is obtaining the bank loan. So always you have to see in the point of business. Okay, not an individual or a customer. You have to consider all these things based on your business view. Understood that this business is there. So business is there. Okay. Wait. Business is there. So business is obtaining from the bank. Okay, so business is obtaining. So there, however, there are two parties. Okay. So you can see there are two owner in additional capital. You can see the owner is providing capital to the business. So that the owner is giving cash. Capital means it can be both cash or any like any asset. Okay, so owner is given to the business. So see, you can see that it's a transaction. As we say, it's the exchange of resources between a business and other parties. Other parties means this owner, customer, electricity board, bank. So here you can clearly identify what is a transaction. Okay, so now Lamai, let's go for the next one. So what are events? Not only that means we studied that in an accounting process, there are two inputs. One is a transaction we discussed earlier, and now let's go for what are the events. Events Lamai means it is something that is due to business activity or some causes due to business activity. That means only the business is that means it is affecting only the business. Example, damage of the trade stock. Trade means what? Selling. The selling stock. Okay. Like remind these terms, you will when you are going on your further chapters, you will automatically understand what it is selling. Trade means okay. Stock means something called as your remaining goods. Stock means like the remaining goods. This stock means something the remaining goods. Okay, so you can see the damage of trade. That means the selling stock. That means is it? That means can you tell that there are two individuals? No. That means that in the business your goods have been damaged. So are there any two business any other party? No, right? It is the business itself. Bad debts means Lamai. For now, you just understand that what is bad debt. In our previous in our following videos, we will be explaining what is bad debt. But for now, you can learn it because it is due to some business activity. Bad debt means, I will be telling in a short form, bad debt means when you're, now example, when you're selling. Okay, let's see now it is there even in your book, right? So I will be explaining that in a very short and sweet form. Okay, that means you are selling, right? You are selling your goods. So you can sell your goods or it can be your services, right? It can be services. Then after that, what you are selling on the goods and services on credit basis. Now, what you are telling, okay, that means a customer is coming and you are selling your, let's say, especially you are selling you are having a bookshop store, then you are selling your books on a credit basis. Credit means what? Okay, you pay later. Then what happening after a while, after a period, okay, after a period, okay, after a period, then that customer is what happened after that, the customer, what happened, will not give the money. That means he will not give the money, but that he should give the money, right? So what have that customer died or like he ran away because of some reason? That means we know that he will be not giving us money. Okay, so that is what called as bad debt. So you will be understanding it further videos. So we will be explaining that in a very detailed way. Okay, so one important note, we should know that now if you are taking any transaction, okay, if you are taking any transaction, okay, if you're taking any transaction, okay, transaction can be both. It can be on cash, it can be on credit basis. And also, transaction means we can sell. Okay, we can sell or we can provide a service. We can provide a service. And also that can be in both cash or credit basis. Okay, we can okay, let's see. Okay, that means a transaction. That means it can be a transaction can be resolved because of selling anything or even you're providing any services. And Lamai, it can be both. You can also take. That means now example. You can tell an example that transaction can be made on cash or example you are having a business. Okay, let's see your business is example, let's see. Okay, example, let's see. You are example, let's see. Okay, example. Yes. Let's take manufacturing. That means you are manufacturing. You still have family. There are two common manufacturing for that. A service providing business. Now let's take one manufacturing example. You are manufacturing furniture. Okay, that means you are providing, you are selling, right? You are selling goods. Okay, so that can be in both format. You can even take that during the transaction, you can tell, okay, give me the money. That means if the customer is giving you at that time, it will be a, so you are selling, and at that moment, you receive, money. Okay, you receive money. So that will be what? That will be your cash sales. Okay. Then you're selling, right? You're selling goods. And if you're what you're telling, so guys, this is the one first instance. Okay. Second instance, what it can be now, right? Second instance, you can say that you are selling. Okay, you are selling. Okay, you are selling. Okay, and the customer is paying later. The customer paying later. So that will be what? It will be credit. It will be credit sales. Understood, Lamai? So one you can give in cash basis, one you can sell in cash basis. Another one you can sell on credit basis. Okay, so it can be now example. Now let's see what we can see. How about a service providing business? Let's say yes, about insurance, like say, institute, let's say, institute. Okay. It's a manufacturing business, right? Hmm. Let's say about salon. Okay, so what the salon will be doing? So the salon will be providing what? It will be providing services, right? It will be providing services. Okay, so they will be providing services, and like that also even at that moment, okay, that means at that moment you will be receiving money. Okay. Or even the same transaction can be the same transaction, or the mode of the transaction can be in any type of business organization. It can be even manufacturing or selling. Okay. So I hope that you understand it. Okay. So these cash sales, so we can come to a conclusion that, okay, we can come to into a conclusion that, okay, the modes of transaction, okay, it can be only two ways. One is on cash basis, the second is on credit basis. Okay. Now let's go for what are the elements of the accounting. So we will be discussing in a very short and sweet manner. Naman, so elements of accounting means in accounting there are some pillars or the components. This accounting has been formed by all these like the pillars. The first one is assets, equity, liability, income, and expenses. So I hope that you understand this lesson. Now let's go for a short note. Okay, important note. So we learn today what is an accounting. Okay, so we learn today. So we learn what is accounting. Then we learn what are the main objectives, and also we learn what are the sub objectives. Then we learn regarding the process, then we learn regarding the inputs of the business. Okay. Inputs of a business, we learn regarding transactions, we learn regarding things, and also we learn regarding inputs of a business. Then we learn what are the modes of a transaction. Okay, so if you are having any doubt, you can even drop me a message, or even you can drop me a message. So I will give you my Gmail account. Right? Um, So I will be putting that in the description box. Okay, I hope that you have understood all these lessons. Okay, now I'll be winding up my lesson. Okay, thank you.